I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome back to the show, John.
Hey, Jim.
The marijuana space, is it hotter than it ever was?
Oh, it's a huge business, potentially. And there's never been a marijuana space before the last couple of years. So I think it's potentially gigantic, and I think it's one of those things where the tide has turned, and you can't put the genie back in the bottle. So it really doesn't matter what happens in the next U.S. election. The trend is going to be for states to progressively legalize it, or the federal government just to announce, the ending to the Schedule I listing of weed, and have it be just legal across the board. And that's a multi-billion-dollar business when it really gets going. So it's interesting, especially from an economic theory standpoint, to see a brand new market just spring to life. Because what used to happen in the shadows with not a whole lot of innovation necessarily, you couldn't have 100 different weed-related products when it was illegal, because that was just too much complexity for the risk. And now you go into a pot store, at least down here in the States, and it's like a little grocery store, or a drugstore or something. They've got every different kind of candy and cookie that you can think of, and things you put on your skin, and things you drip into your eyes, and things you hold under your tongue. It's an amazing proliferation of new innovation. So that's very cool. As an economics geek, I'm having a lot of fun watching it.
On the beverage front, Coca-Cola has expressed interest in teaming up with some major marijuana producers. Pepsi says it's not holding any negotiations or exploratory talks. Why do you think there's a difference between the two major beverage makers?
Oh, I have no idea. I imagine they're all looking at it and then weighing the risks and the rewards and making their own decisions. But I think that let's fast forward 10 years, and probably everybody who has a wide variety of any kind of food or beverage products, all the big companies, are going to have a product line that fits somehow into the weed space. So that, it's just one more thing. And the tobacco companies are looking at weed as a natural evolution for them. They'll downplay tobacco over the next couple of decades because it's so far out of favor, and emphasize weed. They've got the equipment already to make packs of joints. So they're liable to end up being the big players in the packaging of marijuana, along with the food and beverage companies. While it's possible that the Monsantos of the world and the big seed companies end up dominating the actual production. So it could be that what started out as a burst of small entrepreneurialism ends up being just another corporate sector. And that would be a shame, but that tends to be the way things go. So hopefully, but like craft beers, I don't know what they're like in Canada, but they're huge down here. And we think when we go into a bar and order some unusual sounding beer that we've never heard of before, that we're getting something that's made by two guys in a garage. But probably it was originally, but it's been bought out by Anheuser-Busch in the meantime, and it's just one of their beers now. That's just how the market goes. So I don't know how all this ends up, but I do think that it's a lock that this is a multi-billion-dollar business in the future, and that the overall effects are good, because the CBD that is a component of marijuana has a lot of health effects, and because of that, it's a competitor for a lot of pharmaceuticals. So we could see big pharma either lose out in this proposition, the opioids and some of the other painkillers, and along with a lot of the psychoactive drugs that are out there now, losing ground to weed, or we could see the big pharma companies step in and bring out related products that they find a way to patent and then try to dominate the market that way. Very interesting, but not easy to predict in its details a decade hence.
Well, here in Vancouver, some doctors are prescribing marijuana pills to help people get off opioids. So, one drug being substituted for another. And I think the classic case of that was heroin was touted at one time as the cure for morphine addiction.
Yeah, I know. Well, we're reasonably sure that weed is not as dangerous as heroin. It's neither as addictive, nor does it have all the side effects that heroin has. So this time is probably a more benign transition as we find things that we can do with marijuana that replace expensive, dangerous, badly tested, badly marketed pharmaceuticals. I think that's a net plus for society. So on balance, I think the legalization of weed is a good thing. And now the question becomes, how far do we want to take the whole drug legalization thing? Do we want to move on to cocaine or amphetamines or ecstasy or whatever else that's out there now that's not legal but that's widely used? Does it make sense to adopt the same model for those things? And I think, the libertarian answer is, of course. What you do with your own body is nobody else's business, so take whatever drugs you want, but accept the consequences of your action without asking other people to bail you out.
Well, if it's sold from a government store or a supervised private store, the quality of what you're getting, it's been tested. And, one of the biggest problems with all the illegal drugs is you don't know what it's been cut with.
Oh, yeah. That's how a lot of heroin overdoses happen, is you take your usual dose, but you happen to have bought a less badly cut batch. So your usual dose actually has twice as much heroin in it, and you overdose. And if something is regulated and sold in government stores or government-regulated stores, that eliminates that problem. But you can still screw up your life on drugs. I mean, drunk drivers kill thousands and thousands of people every year, and alcoholics ruin their lives and their family lives in other ways. So drugs aren't inherently benign. They're just like many other things in life. They have power when used well, and they're extremely dangerous when used badly. And so it's up to the individual to figure out how they can use these things and get the best of it without the worst of it. So there's no doubt that if you legalize a category of drugs, that some people will do stupid things, or some people will have accidents or whatever, so that there'll be a human cost. The question is the cost manageable, and is it dwarfed by the benefits? And if the answer in each case is yes, then there's no reason not to do it. There's no moral issue with stuff like this. If you want to take speed or weed or heroin or whatever, it should be completely up to you. That said, laws that have an age limit with this stuff, I think, are completely valid. We should try to shield our kids from all of these things, and that's never a perfect process either, but that's something that society has to try, and it falls into the category of downsides that we have to be able to manage, and if we can't manage them, then that's a whole different story. But we do with alcohol, to an extent, and cigarettes.
Should the Democrats ensure that whoever they pick as their presidential candidate is in favor of legalized marijuana?
Oh, I think it's almost guaranteed. I mean, there might be one or two Democrats who might run for president who are opposed to drug legalization, but that's way outside the new mainstream of the party. I think even I think you could run for president as a Republican and be in favor of legal marijuana and have that not hurt you too badly. So if the Democrats win, then I think it's highly likely that a national legalization of weed will happen in the first 4 years of the next administration. Might not be the first thing they do, because they've got a lot of other priorities, you know. They really, really want to raise taxes, you know, and do all the socialist things that unfettered liberals will do when you cut them loose. And I think this time around they would be cut loose. There's a definite scenario in which the Democrats nominate a Bernie Sanders type democratic socialist, and the Republicans are so discredited by the time this election happens that the Democrats also take over the Senate and hold the House. Then they've got everything. And there's nothing standing in the way of them enacting every single plank on their platform that they run on. And that, this time around, will be further to the left than probably anyone that we've had in ever. Not even in the last century, just ever. This will be the most liberal, trending towards socialist government that the U.S. has ever had, and that's not a guarantee that it happens that way, but it's definitely one of the two or three most likely scenarios down here. So that it'll be interesting. Though, Jim, I got to say one thing: it almost doesn't matter from the point of view of the dollar collapse thesis, right? Because the death of the world's major fiat currencies is inevitable no matter who's in charge. If Donald Trump wins next time around and the Republicans take back the House and the small government, quote unquote, party is in power for the 4 years after that, they're still going to run trillion-dollar deficits year after year after year. They're still going to try hard to lower taxes some more. They're still going to beef up the global military empire. And we will eventually have a currency crisis that looks like a hyperinflation, and the dollar will evaporate, or it'll have to be reset at some much, much lower level, and then we'll have to go back to the gold standard. See, that would happen under the most conservative government that you can imagine. So imagine what would happen under the most socialist government that we've ever had, and we could actually see that. You know, we could see President Bernie Sanders next time around, or President Elizabeth Warren. There's a politician named Tulsi Gabbard that I'm liking a lot from what I've seen of her, and she would make a good vice presidential candidate for either of those other two. She's much younger, so it would be logical for her to come in as the VP and be there if needed. But either one of those tickets, or you could have a Bernie Sanders and Elizabeth Warren on the same ticket with either one of them at the top. These would be extremely liberal governments, just like nothing we've ever seen before. But it's also completely predictable, because when you screw up your finances, you screw up your politics. And you get voters who are more open to ideas from outside the mainstream, because the mainstream clearly hasn't worked. And that's happening in Europe, of course, with Brexit and the Italian populists taking control, and Angela Merkel being a lame duck now, and who knows who's going to replace her, and the French yellow vest protests. So it's happening in Europe almost across the board. And Donald Trump is the example of that in the U.S. You know, he wouldn't have won the presidency in any prior election. But this time around, people were so fed up with both the left and the right, or both the Democrats and the Republicans. You can't even really call them left or right in their establishment personas. You know, Hillary Clinton is she would have been very warlike. She would have been a right-wing foreign policy president, it seems like. And a lot of the Republicans that Trump ran against in the primary would have been centrists. They would have been expanding entitlements and possibly raising taxes. So it's not like we had a big choice. And that lack of choice really frustrated people. So Bernie Sanders almost won the nomination for the Democrats. He's an avowed socialist, which you couldn't even say that word 3 years ago. And now he's running on that platform and almost winning. And then Trump, on the other side, crushed a whole bunch of mainstream politicians, swing state governors, guys like that who normally look like the perfect candidate. They got crushed by this real estate developer with a big mouth. And we are nowhere near done with that process. It's going to continue in the next cycle. We're going to have financial chaos, political chaos, and then the presidential election. So it's completely possible that whoever wins is going to be way outside the mainstream. Either it'll be Trump again, or it'll be somebody from the Democrats that just based on their policy positions wouldn't have had much of a chance in the Clinton era, for instance, or against Obama. Those guys would have just steamrolled back in those days, these candidates. But now people are increasingly open to new ideas because the old ones didn't work. And we don't, in America, have much of a sense of history. So the fact that a lot of this stuff was tried and failed over and over again throughout history is completely lost on the average, for instance, millennial voter, or really anybody. I mean, you can go all the way up through Social Security recipients in the U.S. and find a complete lack of any kind of historical knowledge. So they're kind of blank slates, and they're seeing this stuff and saying, hey, that's a great idea. Why didn't anybody think of that before? We'll just raise taxes on the rich, and we'll make college and housing and healthcare free for everybody, so it's somewhat disturbing to watch, but, it also plays into the whole script. I mean, it's according to the script of things getting more and more chaotic until they collapse, and then we have the real debate about what kind of a country we want to have going forward, but we have to have the collapse first, because this system right now has this institutional momentum that's heading off the cliff. And until we go off the cliff, we're just going to be like we are right now. We have to have the collapse. We have to have the currency reset. And that's coming. And this stuff that we're talking about is contributing to it.
We'll have more with John Rubino right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with John Rubino. John, do you expect the stock market to have either a major correction or a crash anytime soon? And how would that affect the U.S. economy?
Well, we're at valuation levels in the U.S. stock market where a crash could happen any day. Historically, when stocks were valued this richly, and dividend yields were this low, and other valuation measures that you want to use are at the levels they are today, a big crash ensued. So any time that anything happens to spook the financial markets, it could cause a collapse in the stock market. However, we're at an interesting point in time because it looks like the Fed is shifting gears. They've been tight for a year or so, where they've been raising interest rates and they've been shrinking their balance sheet, which is to say they've been pulling money out of the financial system. And in October and November of last year, that just scared the hell out of the stock market. It started to just flat out collapse. We went from all-time highs to bear market, which is a 20% drop, in no time. It just happened in the blink of an eye, relatively speaking. And that spooked the Fed. So now they're backpedaling. They're saying, well, maybe we won't raise interest rates anymore. And Janet Yellen, the former chair of the Fed, came out and said the next move will be down in interest rates. The Fed will cut rates next time it does anything. So that is something that the stock market likes, which is part of why stocks have been going up lately. So it's hard to say what happens in the short run because you've got these competing forces. You've got a global economy that's slowing down a bit. You've got wildly overvalued asset prices. But you've got a Fed that might shift into easing pretty soon. And it's not clear which of those forces wins. I suspect that the Fed is going to require some kind of a crisis to force it to really start cutting again. In other words, to go back to QE on steroids, something even bigger than the last time around. They're going to need a good reason. So we'll need another financial crisis of some sort to spook the Fed into really aggressively easing. So I think there's a decent chance that the next move in the financial markets is negative. In other words, the bond market or the stock market or both of those markets has to go down in a way that scares enough people to lead the Fed to go back to being super easy. So that's probably the 2019 story is instability. And that plays into the political thing that we were talking about. Weird politics, unstable politics scares the financial markets. And unstable financial markets spook people who are made insecure about their job or their investment portfolio or their house value or whatever. And it makes them more open to out of the mainstream politicians. So you get this feedback loop where politics gets crazy, which causes finances to get even crazier, which causes politics to get even crazier, until you enter a kind of societal death spiral. And that's something that we could see this year and heading into the 2020 presidential election here.
Well, if there's a recession, will the blame game include the president?
Oh, whoever's in charge gets blamed. That's just always how it works. Trump's big risk is that the financial markets flake out just as he's trying to get reelected. And that makes it really hard to win. If you go all the way back to George H.W. Bush in the what was it? I don't remember exactly when that was. But anyhow, early 1990s. So he was very popular after the first Iraq War and the fall of the Soviet Union and everything. He was riding this wave of popularity, and then a recession hit. And his popularity just collapsed just in time for him to run for president against Bill Clinton. And so he got spanked in that election. He got really repudiated. And I think it's fairly safe to say that if the economy was still growing, if we hadn't had that recession, that Bush would have gotten a second term. Same thing with Trump, only more so, because Trump was never super popular. Bush, I think, had a 90% approval rating or some insane number like that at one point, not that far before the election. Trump's not going in with that kind of popularity. However, he's a really good campaigner, and you put him up against anybody straight up, and he's very effective. So if he's against Bernie Sanders or Elizabeth Warren, he'll find things that really get under their skin and that energize crowds. find things to say about them. So, we can't write him off. He could easily get a second term if the economy cooperates. But I think the odds are against that happening because we're already 10 years into a recovery. That's a really long time for the economy to grow without a recession. If I'm not mistaken, we've set the record just lately. This is the longest economic expansion that we've had without a recession. And because of that, 2 more years is really, really unlikely unless the Fed jumps right back into QE immediately, which is what Trump would love. He would love the Fed to cut interest rates back down to 0. And then we worry about the consequences of that after the election. But in the meantime, everything booms because interest rates are 0. But that's highly unlikely. And if there's a financial crisis that leads the Fed to ease, then Trump gets blamed for the financial crisis and doesn't necessarily get the credit for the Fed easing because the Fed had to do it to stave off the Trump crisis, And so I think the odds are now that if the Democrats don't elect someone who's just certifiably crazy, that needs to be institutionalized once they get on the public or on the national stage and start talking, that they got a pretty good chance of winning this time around and of controlling the whole government. So, buy gold. Historically, you want to buy gold.
We'll talk about that when we come back with John Rubino.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with John Rubino. John, as you mentioned just before the break, going into gold, do you expect it to have a big pop? Because it's been slowly, somebody said stealthily climbing, not big jumps, but if you look at where we were a year ago, it's gone up nicely.
Yeah, the January effect has been pretty nice for gold because normally the first couple of months of the year is really good seasonally for gold because that's when the Asians do all their gold buying in order to give silver and gold jewelry as wedding gifts in spring weddings. So if you look at the long-term chart of gold, you see that every January is good. It goes up every January and then either turns right back around or continues for a few months. In 2016, we got a 6-month increase in gold and silver prices, which just took the mining stocks through the roof. And I was hoping for another one of those because it was really set up nicely. The structure of the futures market had speculators who were really, really bearish, and they're usually wrong at turning points. When they get too excited one way or the other thing happens. The opposite thing happens. And so it looked like you have seasonality and the speculator positioning both in gold's favor. And gold and silver went up, and a lot of the gold mining stocks have done okay, but it hasn't been the blowout that would have been nice. And now, we've got another couple of months of decent seasonality, so we'll see. But the old saying, sell in May and go away, is linked to Asian buying as well, because once they stop their wedding buying, then demand for gold and silver tends to drop off, and prices tend to trend back down for the rest of the year before they start over again. Having said that, the fundamentals for gold and silver are astoundingly good. We're with Republicans in charge of the government running trillion-dollar deficits. The whole rest of the world is ramping up their deficit spending, including China and most of the big countries in Europe. And private sector debt is at record levels in most places, in most categories. So we're incredibly heavily indebted. And historically, that usually leads to some kind of a currency crisis. So a currency crisis means the value of the currency plunges, which means real stuff, when priced in that plunging currency, goes up in local currency terms. So that ought to be really good for gold and silver, because they're the ultimate real stuff. You know, that's the kind of money that governments can't make more of. So when the local experimental currency stops working, then we go back to gold and silver at much, much higher prices in local currency terms. That's highly likely to happen at some time in the not-too-distant future. So if it happened this year, then seasonality doesn't matter, the positioning in the futures market doesn't matter. It's just this tidal wave of capital pouring into precious metals. So I kind of think you have to be there in anticipation of that, because once it gets going, you know, it's not going to be easy to position yourself at that point. If gold and silver really jump, that will probably coincide with supply issues. So yeah, you can go ahead and order silver coins at $32 an ounce US, in other words, twice today's price. And someone will take your money, but they might not be able to give you those silver coins for 6 weeks or 4 months or ever. You know, you just can't know. So it's not going to be the kind of thing where you can just immediately position yourself in gold and silver. Or you can buy mining stocks, but they will, you know, if there's a supply crunch in gold and silver, the mining stocks will just quadruple from here. So you can buy them, but you're not buying them at a good price anymore. So you kind of, I think, have to position yourself now with precious metals in anticipation of this big currency thing happening, and then just be prepared to get through another couple of seasonality cycles or whatever, if that's what has to happen. And just know that at some point something really good is going to happen to that part of your portfolio, because you can't know the timing of these things. Obviously, if the timing of these things was predictable, then you'd see some serious front running out there on the part of some very big players, and we're not really seeing that right now. So I don't know. I think it's a good. And one other thing in the short run for gold and silver. Gold has a resistance level that it's bounced off of 4 times in the last 5 years, and that is around $13.50, $13.60 US dollars. And it's heading that way again. It's up in the low 13s now. So another good week or two could pop it up into the range where it's touching this resistance again. And from a technical standpoint, that's really interesting, because if it bounces off of it, then a pretty decent drop is going to ensue based on the last 4 times that that's happened. But if it pokes through it and stays above it, then the next resistance is a lot higher. It's up in the 14s or 15s or 16s, depending on who's doing the charting. So we could see a really nice run for precious metals suddenly when it breaks through that level. So you need to be watching that level, because that's a fairly big deal based on recent history. So when it gets into the, say, 1340s US, then you really need to watch, because something big is very possibly going to happen in the short run. And it could be a really good big thing. You know, it's completely possible that we pierce that resistance and then just keep on going for a while. And that would be nice. It'd be about time, you know. It's definitely due for fundamental reasons, and it's overdue for technical reasons.
John, thank you so much for being on the show.
Sure thing, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have any questions for John or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.